Hi everyone, welcome back to FX Action Trader. I'm Chuan. So, how was your trading week? I hope that is good. And in today's video, I'm going to share with you how do I trade by using a pullback strategy. Alright, so make sure you have subscribed to our YouTube channel as we are going to produce more content in the future, and also make sure you have liked our Facebook and Instagram page. Alright, so let's get started. Alright, let's start. Okay, so for this setup, there are 3 steps that you need to follow very strictly in order for you to look for a trade in your daily trading. Alright, the first step is the trend. Okay, so basically in forex trading or in any market condition, we have 3 types of trend, which is first the uptrend, downtrend, and and also the sideways market. So for this setup, we are only going to deal with a trending market. So very simple. When market is in an uptrend, we can see that market is going to do a higher high and higher low, higher high and higher low. So when is the time for us to make our entry? So many people will be going to look for a buy trade here. So in my opinion, I think that this is a bit risky because we don't have confirmation. So when market give us the confirmation, only we look for the buy trade. So what is the confirmation? The confirmation is very simple. Market need to continue to create a new higher high in order for market to be in a valid uptrend. So what we do is that we wait for the previous higher high to be broken, and only we entry in the next higher low. Okay, so if market is in a downtrend, market is going to do a lower low and lower high, lower low and also lower high. So many people are going to sell here. So same as the uptrend, I will not go for a sell trade without a confirmation. So what we need is that we need the previous lower low to be broken, and only here we entry for a sell trade. This is a very important factor because there are a lot of traders facing losses because they are afraid of missing out the party. Alright, they are afraid of missing out the boat, missing out the trade, and they enter the market too fast before the market even gives them a confirmation they have placed their entry orders. So I wouldn't recommend this. Okay, so the next thing that we are going to discuss about is price action. So this one we are going to talk about candlesticks, and I'm going to use the engulfing candlestick and also a pin bar. Alright, so for an engulfing candlestick is very simple. We have 2 candles, either is up or down, and the latest candle will be engulfed at least half of the preceding candle. So this candle is a bullish candle, and this is a bearish candle, and this is a bullish candle, and this is a bearish candle. This is an engulfing candlestick pattern. So I have a video on advanced engulfing candlestick pattern, so you can click on the link to have a look. So the next is pin bar. So a pin bar, it can be either bullish or bearish. A pin bar usually is a very powerful trend reversal candlestick because why? They have a very long tail. So this is a bullish pin bar. When this bullish pin bar happens at a swing low or a support area, this means that market is likely to reverse. And when we have a bearish pin bar at a resistance or a market swing high, this means that the existing bullish trend might going to turn and market is likely to go for a downtrend. Okay, so we are going to talk more about these 2 candlestick pattern in later part of this video. So let me continue. And the third thing is with EMA. I'm going to use this 50 period EMA or EMA 50 in this setup. Okay, so EMA, the name for EMA is exponential moving average. So there are a lot of EMA combination in the market. There are 21, 50, 100, and some of the traders, they are even use EMA 8 or EMA 7. So I wouldn't say that there is no right or wrong in these EMA settings. Just I feel comfortable with using this EMA 50. So how does the EMA helps in our daily trading? So the EMA is a dynamic support and resistance, meaning that the EMA is also like an SNR, which are always move according to the market reaction and also the price movement. So whenever the market is when market is above EMA 50, we look for buy. When market is below EMA 50, we look for sell. Okay, so these are the criteria we need to take note when we are doing our backtest. Okay, alright, so let's get back to the trading chart, and I'm going to show you step by step on how can we use this setup by following this 1, 2, 3 step: the trend, price action, and also the EMA 50 period. Okay, so when we see about the EMA, so this is the EMA 50. Okay, let me turn on. Okay, so when market is in an uptrend, we can see that the market will be going to stay above the EMA 50, and when market is in the downtrend, we can see that the market stays below EMA 50. So the first thing that we need to do is that we need to identify, because we can see that from the preceding market, we can see that this market is currently in a very clear uptrend, because we have the market keep on creating higher high and also higher low. This is the higher high, higher low, and also higher high. So we are expecting market to give us an entry signal here, and market will be continue to go up. So we have our trend fix. We know that we should be looking for a buy signal. Okay, so let us continue to see what market does. We are going to wait for two things. First is the price action, and the second thing is that the price action is above this EMA 50 period. Okay, so when market continue to move, okay, so this is a bullish engulfing setup. Okay, I will be going to go for a buy, because we know that the previous lower high is here and the previous higher high is over here, and this fulfill our first criteria. Our entry is aligned with the buy trend, because we are looking for a buy trade in an uptrend, and the third criteria fulfilled because we have the signal above the EMA 50. So let's say we go for a buy trade. Alright, the stop loss I will just put below the engulfing candlestick, or you can put below the EMA. And for the ratio, I will take at least 1 to 2. Okay, I will take at least 1 to 2. So let us see how market turn out. We need to hold for some time. Okay, so we got the first trade TP, and the reason I put the stop loss below the EMA is that, remember just now I have mentioned that the EMA 50 is a dynamic support and resistance. So whenever whenever an EMA is broken, there is a potential in the market for the market to reverse. okay, but in order for market to reverse from an uptrend to a downtrend, okay, in order for market to reverse in order for market to reverse from an uptrend to a downtrend, we need to confirm one more thing, which is market has created a new lower low and also a lower high. Okay, so if we see back on this market, has broken this EMA, but market fails to create one new lower low. In fact, market has continued back to the uptrend. Okay, so it's very important for us because many traders will get trapped when they see this bearish engulfing candlestick. Okay, so this is something additional info that I want to share with you guys. Okay, so let us continue to have a look on the market. So I will delete this, and we know that market has created a new high, and this point will be a new lower high for us, and the new high is somewhere around here. We let market to continue to move. Okay, alright, so this will be the new high and this will be the new low. Okay, okay, this is the new high, higher high, and also this is a higher low. Okay, market move like this. And we have another setup here. Okay, and let me, okay, the same thing, we take 1 to 2. Okay, we let the market to continue to play. Alright, this trade we got stop loss, and we can see that market has created new low, but this previous lower high was not broken. So in order for market to become a downtrend, we need market to break this level in order for the downtrend to be valid. Okay, it's okay. So when market happens to be like this, we should not look for a trade. We wait market to give us more confirmation. Okay, we let market to continue move. Okay, now we know that the downtrend is valid because that market fails to create a new high and the previous lower high was broken, and market has created a new low, retrace, and is likely to go down. Okay, and market stays below the EMA. So this is the sell setup, and let me move. Okay, this is the new lower low, and also this is the lower high. Okay, so let's say what if we go for a sell setup after this bearish engulfing candlestick, because market has crossed the EMA and stays below the EMA, and we take the ratio the same 1 to 2 ratio. Okay, okay, our sell trade got TP 1 to 2, and we check again, we move again. This is the lower high, and this is the latest lower low, the nearest lower low. Before here, confirm. So let us let the market to move. Wow. Okay, market has created a new low, and this is the new lower high. if you cannot see this clearly, you can always use a trend line to draw out. Okay, so let us go for another sell setup here, another sell trade here. Because this is a downtrend, we have a bearish engulfing candlestick, and we also have market stays below the EMA 50. Alright, let us continue to go, and we take 1:2 risk and reward ratio. Okay, this trade we got TP as well. Alright, let me show you one last example on how we can trade with this setup, and this example is a bit tricky, we know that, because we can see that market is in a sideways condition. So why do I say that it's in a sideways condition? Because we know that we can see that this was the previous lower high, and this is the previous lower low. But market has broken the previous lower low and created a new low over here, and also at the same time we can see that the previous lower high was broken. But in order for the market to be in a valid uptrend, we need one more push, which is that market need to break this previous high and pull back, and only we can look for an uptrend. Okay, else when market stays below, or sorry, when market stays between these two levels, we can conclude that market is in a ranging movement or a sideways movement. Okay, let us continue to have a look. So, and also in this condition, we can see that the market tends to turn around this EMA 50. Alright, so it's very important for us to stay away from the market when we know the market is in a very clear sideways movement. Alright, traders who have a buy entry over here will get their stop loss trigger. Okay, and traders who sell over here will get their stop loss trigger as well. We only wait for a very clear confirmation before we make our entry. Okay, now we know that this previous low was broken, and this level has become the previous lower high, and we can draw the market trend like this. Okay, so this, I will say that market is the market after the sideways movement, market continue to remain in downtrend, and we should only look for a sell signal. Okay, so let us continue to have a look. We wait for the new lower low to form. Okay, so this, I will take this as a valid signal, valid engulfing signal, because this signal is near to our EMA and also aligned with our market trend, which is the downtrend. So the same thing, the stop loss I will place above the EMA, and the risk and reward ratio I will take 1:2. Okay, it's important to make into a very good habit that you always practice 1:2 risk and reward ratio. Okay, so let us see what market do. Okay, we got our TP, another TP. Alright guys, thank you for watching. I hope that you learned something new today and you can apply this on your next coming trading week. Alright, please give us a like button and also subscribe to our channel for more videos. And also you can comment below there what kind of video that you are looking forward to, and we are going to get more ideas in our future production. Alright, thank you and have a good day.